if you take all the mandatory spending being Social Security, Medicare, other entitlements, and the interest on the debt, it now equals all of our tax receipts. And if you canceled the Defense Department, fired every government employee, shut down every government office, and just paid that mandatory spending, we couldn't balance the budget. And if you look at just those mandatory spending items, that's what will add, according to the Congressional Budget Office, which is bipartisan, $100 trillion to the debt over the next 30 years. So we have to have a way out.
Welcome back to Metals and Miners. I'm its founder and its host, Gary Bohm. We have a super important discussion lined up today that I am absolutely thrilled about. Today, we're fortunate to have with us Kevin Freeman. Kevin is known as the father of the LSV investing movement. LSV refers to investing in liberty, security, and values. He's also the co-founder of the National Security Investment Consultant Institute. Kevin is the host of Economic War Room with Kevin Freeman, which is found on BlazeTV. He is a New York Times best-selling author, most recently a book titled Pirate Money, and he is considered one of the world's leading experts on the issues of economic warfare. Kevin has briefed the FBI, DIA, ONA, SEC, Naval War College, and so much more, and a host of government agencies tasked with protecting America, as well as members of both the House and the Senate and multiple presidential candidates. He has many more accolades and accomplishments. Kevin, thank you so much for joining us today.
Oh, Gary, it's a pleasure to be with you.
Okay, let's begin with you sharing some of your past work when you were actively advising government and military agencies regarding economic terrorism. I'd like this time to set the stage for our very important discussion today. So please paint the picture for our viewers, what your role was and what you were watching and what you were looking out for and advising about.
Well, initially, it was 2008. My background's investment management. A friend of mine who went on to Wells Fargo to be the chief investment officer for Wells Fargo and I were talking. We were business partners in a previous business venture. He and I had worked together at the Templeton organization. If you've heard of Franklin Templeton, this was the Templeton side. And Eric and I were talking about how financial terrorism in 2008 could take down the stock market and how it could literally bankrupt America. Enemies could do it. They could do it with credit default swaps. They could do it with naked short selling. All of these exotic instruments that the average person on Main Street has no idea exist, but we have trillions and trillions, maybe even hundreds of trillions of dollars worth of derivative instruments that Warren Buffett called financial weapons of mass destruction. So I just raised the issue with my buddies that worked at the Pentagon, and the next thing I know, I was flown in, private briefings, you've got to talk, CIA, DIA, top flight, helping to educate them on how we could lose a war without a soldier being involved. And that's really how I got into it.
That's amazing. Well, I'm sure those experiences were thrilling for you as well. Well, let's discuss this concept of economic warfare. In a 2010 Chinese government meeting, their strategy was outlined and published. It said, counting on the fact that the US dollar is the international currency, the US government has increased the number of dollars in circulation, leading to its devaluation. If no one purchases them, then they will only be circulated domestically inside the US, and that will cause inflation. In order for the countries with foreign exchange reserves in the US dollar to restrain the US from over-issuing US currency, they must act together and not buy US dollars. The fact that the US dollar is the world's reserve currency makes the US a financial superpower. So this was all coming from China. Well, yeah. China wants to challenge the position of the US dollar. It needs to take the path of internationalization and directly confront the US dollar. So, Kevin, my question is China doing this very thing today that they spoke about more than a decade ago?
Yeah, that sentiment, you may be quoting exactly from Quishi magazine in 2010, that has been pulled down, except China Scope has an English translation of it that you can still find on the internet. I documented it when it first came out. In fact, took it into the Pentagon. And the Pentagon said, why would China do that? This is a one-off. That's not their official policy. They're our banker. Well, just take historically, in 2008, China held $1.2 trillion of our $10 trillion debt. So they had 12%. Today, they have maybe $750 billion of our $35 trillion debt. So it's a little over 2%. Bottom line, they went from 12% to 2% of our outstanding federal debt. So yes, they're following it. But what happened in 2013, Xi Jinping came to power. We went through a budget challenge and crisis and shut down the government briefly. And Xi Jinping made the case, not just in China, but internationally, that we must de-dollarize the world. The dollar is done as a currency. We've got to work together to stop it. Now, he finally joined Vladimir Putin in that argument. Putin had been making that argument since 2008. Putin had Igor Panarin go out publicly and say America is going to collapse and it's going to be mass immigration and this Ponzi scheme they call the debt, and literally calling for the demise of the dollar, and America would collapse into five nations. At the time, China didn't join them in 2008. In fact, China said to our Treasury Secretary there, then Hank Paulson, hey, Russia's trying to collapse your dollar. We're not joining him. We're the good guys. Count on us. But 2013, they changed policies and made de-dollarizing the world their official policy. And yes, they've done exactly that strategy. They've stopped buying U.S. debt, and they've encouraged other nations to stop buying U.S. debt. They're called the BRICS nations: Brazil, Russia, India, China, South Africa, and now 29, 30 other nations that have joined them.
Including Saudi Arabia.
Including Saudi Arabia. So yes, that is their strategy. It's clearly in evidence. They're doing exactly what they said they would do.
So in your latest book, Pirate Money, you share an example of financial warfare that the U.S. waged, and it was outlined by the Army War College. It was in the Suez Canal. So this crisis example in the Suez, it illustrates the importance of understanding the offensive capabilities and the defensive necessities of financial warfare. The United States successfully waged this warfare against the third most powerful nation on the planet at the time. But you wrote further that it is likely that the United States will be targeted by financial warfare in the future. So it seems to me, based on the previous answer, that we are being targeted, that we are facing a financial war. My question is, how significant, how severe, and where are we in this war?
Yeah, well, you referenced the Suez Canal incident, which bottom line is Eisenhower didn't like the path that France and Britain were taking to take the Suez Canal from Egypt, because Nasser had nationalized it and stolen it from the French and the British, and so they were going to, by force, with Israel's support, take it back. And Eisenhower said, if you do that, we'll just dump all your bonds, proving that the British pound was no longer the reserve currency of the world, weakening them and setting them up for George Soros to crater their economy in the early 70s, when he broke the British pound and made $1 billion in the transaction. Bottom line is, we're as vulnerable then. We are in Britain's position. We had the world's reserve currency that everyone respected, but China is now preparing, along with the BRICS nations, to expose us and our weakness in that regard. Can they do it? I don't know. We may be stronger than the British were in the 50s, but I know this: if the world stops buying U.S. dollar debt, then that will only leave two buyers: the Federal Reserve and the people of the United States. Bottom line is, that would be either inflationary or detrimental to our capital markets. Inflationary if the Fed monetizes all the debt, and detrimental to our capital markets if the government forces Americans to buy that debt, meaning that money is no longer available for stocks or bonds of other companies or other investments. So yes, we're in a vulnerable position. China knows it, and they're willing to press the bet. Will they succeed? I don't know, because they're in a terrible position themselves.
Right. Yes, they are. So back in 2016, you were hired by the state of Utah to do an economic risk analysis. At the time, the U.S. had less than $20 trillion in reported federal debt, but the trajectory was obvious and the conclusions were pretty stark that you had spoken about at the time. The U.S. was basically headed to this major financial crisis unless it reduced spending, increased income, or did both. If it didn't alter the path it was on, you predicted the demise eventually of the dollar system. Today, the U.S. debt is about 35 trillion with expectations for it to hit 50 trillion sometime around the end of the decade. We're talking within 6 years. Kevin, as we know, the elite never let a crisis go to waste. It seems that it's an inevitable that we're headed for some type of major financial crisis. In your analysis, are they even planning a crisis to take specific action that furthers some kind of agenda? Or are they doing everything they can to try to stop it?
No, they're certainly acting. Jerome Powell says this is unsustainable. The Congressional Budget Office says that over the next 30 years, we will add $100 trillion to our existing debt. So it's $135 trillion. There is no way our interest alone this year, this is the Economist magazine said that if interest rates don't go down from where they are, we will pay $1.6 trillion on a run rate on our current debt in interest only. No, this is a crisis. It is inevitable. You can see this train wreck coming from a mile away. And yet, and I saw it back in 2016, reported to Utah, and yet they're continuing on the same debt trajectory. Of course they have a plan. Their plan, in my opinion, is central bank digital currencies, where they will completely divorce any monetary printing from the American awareness because they'll create it in ones and zeros. And there's Elon Musk retweeted a tweet that showed Jerome Powell and Ben Bernanke and Kashkari and others talking about how we get money. And bottom line is what they were saying, well, we print it. Not exactly. We create it digitally. And then you have Jared Bernstein, who's the President Biden's economic advisor, being interviewed. And he says, well, why do we have to borrow money if we print it? And he can't answer the question. The reality of it is they're planning this, and central bank digital currency is the solution. Are they planning it because it's inevitable, or are they planning it because they're nefarious? I don't know which. But yes, they are planning for the demise of the dollar and replacement with a central bank digital currency.
So, we're talking about the Fed, Jerome Powell. Is the Federal Reserve caught in a trap here? Meaning if they lower interest rates, inflation just roars back. It's already ticking up higher from a higher base, but does it roar back? And if they keep them high, we're on a very questionable fiscal path, as you just outlined, from ever-growing interest payments and the banking system even teetering on the edge of a cliff for multiple reasons. Should we expect them, the Fed, to at some point lower these interest rates and print, where they will create much more inflation rather than accept a potentially collapsing system at the time?
Well, I wrote a book on that 10 years ago. It's titled Game Plan, and it talked about, hey, look, you got to have a game plan because we don't know which direction this is going to fall. Is it going to fall into a Great Depression, or is it going to fall into a hyperinflation? Or can we narrowly thread that needle? It's becoming increasingly difficult to imagine we can thread the needle without some exogenous game-changing impact. We've had exogenous game-changing impact. For example, China had a very deflationary effect because they were producing a lot of goods and services. They were hollowing out our economy, but in the meantime, it meant that consumer prices for goods would be going down because it was made in China. Can we do that going forward? Well, China doesn't seem to want to be on that deflationary path any longer. I don't think that they have the debt capacity that they can continue to do it. So bottom line is, yeah, the Fed's stuck. Even if they're completely honorable and honest, just as you said, if they lower interest rates, it will cause inflation. If they keep interest rates high or raise them, it's going to bankrupt the nation because of continuing piles of debt. How far can we go? I don't know. We could probably go 10 years, maybe 2 years, maybe 50 years. I don't know, but at some point it runs out. And the problem is no one can predict how long Wile E. Coyote can run off the mountaintop before he realizes there's no land underneath and falls.
Yeah. And the scary part to me is it seems like outside of a ecosystem of people who are following this, most Americans are not really paying attention. They're sleepwalking. They don't have an idea of really the calamity that the country is facing here because of the debt and deficit situation.
Yeah, That's always true, Gary. It's always true that that people had no idea that there was a pandemic coming and they were going to shut all the schools. It's always true that 1929 people didn't know that the gravy train of its ever higher stock market is not going to continue. People are never aware up until Pearl Harbor that Germany is racing across Europe. Bottom line is that's how calamities work. And people don't pay attention until it starts to impact them individually and personally. And that's maybe 6 months away, maybe 10 years away. I don't know.
So you've written that over the past 50 years, inflation has been the biggest threat to our money, but it will seem like a minor annoyance compared to what's coming. Kevin, can you speak into specifically what you see coming? And I know that you don't have a time frame, but just to paint a picture for the people.
Yeah, well, it's the frog in the kettle that doesn't realize it's getting hotter and being boiled to death. And that's where we've lost 90% of our purchasing power since 1971, when Nixon left the gold standard and we just started printing money. We financialized our economy to such a degree that the rich have gotten richer, and some of that has trickled down. So we think we're better off, but we've hollowed out our economy in doing so. So we no longer manufacture much here in the United States. We don't make our own pharmaceuticals, for example. Those are made in China. At some point, that will, that relief valve is going to come back and bite us in the rear, because all of a sudden we're in a war with China. They invade Taiwan, and we don't have pharmaceuticals. So we can't get baby aspirin, and we can't get penicillin, and we can't get the sophisticated antibiotics to stop anthrax. All of those things are a direct result of becoming globalized, where all we are is the casino at the top of the globe. Everybody else is doing the manufacturing, and we've hollowed out our economy. That's what I see is America in a global war that began as an economic war, unless we grab hold. Right now, we can't even produce most of the military equipment that we need because it relies on chips from China and other things. Bottom line is we've put ourselves in a very precarious situation, and we have a little bit of time to address it, but not much.
So, you mentioned that the wealth disparity and that the rich are getting richer. Can you explain, based on inflation and asset prices going higher during inflationary periods, why the rich are getting richer and why those in the bottom tier that don't have the assets, they're taking it much harder?
Well, one way to explain it is, I give you a perfect example. Wealthy people can hedge against inflation and actually profit from them. There are all kinds of instruments that you can use in the stock market if you're sophisticated and you have enough money that you can benefit from inflation, profit from it. The average person doesn't have a way to even hedge against it. So why do you think people are rushing to Costco to buy $200 million worth of gold bars in a month? The reason is Costco is not a market-based supplier. What they're doing is they bought gold and then they mark it up a little bit and they sell it. They don't market to the actual market price. And so let's say they buy it at $2,000 an ounce. They'll sell it $2,050 an ounce or something with a little markup because they're treating it like any other good or service. So people rush out and buy that. But then what do they do with it when they get it? They can't go back to Costco and say, hey, you sold this to me. I want to buy a washing machine, or I want to buy some apples or oranges with this. They won't take it back. So they don't know where to go. They don't have a relationship, and they run off to a pawn shop and they pawn it. And so they get jobbed because even though they bought it well, they're selling it poorly. And by the way, they only bought it well because the price has gone up. If Costco had paid $2,000 an ounce for those bars and gold traded at $1,800 an ounce, they'd still try to sell it for $2,050. But because the price of gold has gone up, then people say, I'm getting a bargain. Well, it's only a bargain relative to the price they paid for it. It may have no relation to the market price. And then when they pawn it, they're not getting out of it. So the average poor person has no ability to hedge, and the wealthy people have instant ability to hedge. And they've got financial advisors and people willing to help them support them. That is the Cantillon effect. So Cantillon was a Scottish-French economist right before the French Revolution, who was warning that this wealth gap was getting bigger. The Cantillon effect said those who are closest to the king profit from the monetization of things, from the printing and making of money. And well, that's true. New York and Wall Street have profited, and Washington, D.C. have profited. If you don't believe me, go visit either one of those cities, go and you'll see it. But the average person further away from the money creation, not so much. You get out to Iowa, not so much. Bottom line is the Cantillon effect created a wealth gap. The wealth gap created a French Revolution. The French Revolution created a bunch of tragic outcomes. It was contrary to the American Revolution. It was built on the American Revolution was built on individual liberty. The French Revolution was built on class warfare. Class warfare ended with a revulsion against property rights. Individual liberty was built on property rights. And so that rushed them into what we would call today would be a Marxist collectivist system. And America went individual liberty with equal opportunity. We've certainly prospered more than France, which was a larger and more successful nation at the time, but America has far surpassed them with a superior system. Bottom line is we've got to create opportunity for individuals to go and move upward, class upward, and financialization has broken that. Inflation breaks that.
So speaking of inflation, corrupt governments expand their power by inflating their own supply of money, and then the existing money saved by the people, that loses value, leading to their, decline into poverty and dependence on the government. How is today's dollar an untethered fraction of what the founders intended, and why does that matter to all of us?
Well, the founders intended gold and silver to be money. In fact, they put it in the Constitution. No state shall make anything other than gold and silver coins tender within a state. The founders hated paper money. Jefferson said paper is poverty. Washington said paper is going to have the effect it has in your state that it's always had, which is going to lead to poverty. Madison, the author of the Constitution, said it's unconstitutional. Our first Treasury Secretary, Hamilton, said it ought not to continue a part of the United States. I mean, I've got here somewhere I've got a Continental note that was payable in gold and silver, except they didn't have any gold and silver to back it up. Net result, it's here is the first money that the founders created. This is a 4 Continental note printed in Philadelphia, 1776. It says payable to the bearer in 4 Spanish mill dollars, which were silver 0.7734 ounce coins, or the value thereof in gold and silver. This was original money here. And they knew that if it wasn't actually backed by gold and silver, it was worthless. So they said when they printed the Constitution and wrote it up and argued it and everything else, they made these points. We're going to have our monetary system is going to be based on a dollar, which was one of these, a Spanish milled dollar, a silver coin. And you can't make anything other than gold doubloons and silver pieces of 8, which is a Spanish milled dollar. You can't make anything else money, just gold and silver.
Yeah, and then the weights and measures. Can you explain the weights and measures and how that ties in there?
Yeah, well, biblically, I'm a Christian. The Bible says God hates unjust weights and measures. How unfair is it if the person that you're negotiating with for your salary to sell goods and services, the largest buyer of goods and services on the planet, and somebody that takes money out of every paycheck of every single American, they're not a fair negotiating partner because they can just print and make up all the money that they want to. And how is that ever going to be fair if they say, hey, I think this is worth $10, and they say, okay, well, we've produced $100. And we say it's worth $100. They can manipulate and control any aspect of the economy by monetary printing and taxation. That's unfair.
Yeah, I agree. So, Kevin, it seems all governments do is cater to their electorate, pledge and spend ridiculous amounts of money. And at the same time, no one really wants to pay taxes. There's massive increases happening in entitlements, defense spending, and as you touched on earlier, interest payments on the debt, all leading to record non-wartime deficits. No politician anywhere, though, is talking about austerity. Yet we have the largest non-wartime deficits in history. In your analysis, is there really nothing left but a huge currency devaluation coming?
Well, a Daily Signal did a report. If you take all the mandatory spending being Social Security, Medicare, other entitlements, and the interest on the debt, it now equals all of our tax receipts. And if you canceled the Defense Department, fired every government employee, shut down every government office, and just paid that mandatory spending, we couldn't balance the budget. And if you look at just those mandatory spending items, that's what will add, according to the Congressional Budget Office, which is bipartisan, $100 trillion to the debt over the next 30 years. So we have to have a way out. There is no way that we can continue on this course without some Now, maybe artificial intelligence is going to be such a robust growth boom that we'll grow our way out of it. I don't know. Maybe that could happen. We're running out of those kind of things. We had that opportunity with the internet. We have had that opportunity multiple times, but we just continue to spend. The last time we balanced our budget was with a Republican Congress and Bill Clinton. And that wasn't a true balance of a budget, but at least it reported the U.S. debt clock didn't go up for 1 year.
Yeah, so it's just simply amazing. I mean, you're talking 30 years ago, too, on that. But on the AI front, the thing that nobody really knows about either, yes, it's going to likely create some amazing growth, but at the same time, it's probably going to consolidate the growth into the hands of the few and create an even bigger wealth disparity, because there's inevitably going to be job replacement from robotics and from artificial intelligence.
Yeah, no, that's right. Except the answer that they're going to propose would be to lock us down, to control us. Same thing they did during COVID, only they'll do it monetarily. And your money will only work if you go along with the system. Perfect example is what China did. China had runs on their bank because their banking system was flawed. People showed up and tried to get their money out of the bank. What they did was they turned the health app on their phone red, requiring them to go home and quarantine. They also do social credit scores. Social credit, you said the wrong thing on the internet, you're not allowed to spend. You question the government's ability to pay off the debt, and you're not allowed to spend, because that is terrorism. You say that you don't think that, one gender thing or another gender thing is the way that you think it is, like J.K. Rowling, the creator of Harry Potter, she has her money cut off because she has said things that are considered hate speech. Bottom line is that they're going to have to go to a draconian control system if the wealth gap worsens any from here, and they're going to use central bank digital currency. That's their one means to control everyone without putting Gestapo on the streets.
It's amazing. So I want to talk about the U.S. dollar being the global reserve currency. It's held that status since the end of World War II. Many countries today, as we've talked about, are trying to take down the dollar as the reserve currency for many, many reasons. Something that would bring more favor to them and less favor to the United States. Would you outline what happens if the dollar loses reserve currency status, and how would it impact everyone who's listening and watching today?
Well, let's just say the dollar as reserve currency is an intermediary, and we're moving to disintermediation globally. So if Saudi Arabia sold oil to China, China would have to obtain dollars and give those dollars to Saudi Arabia. And the dollar would be at use in there, which means that every nation in the world, if I'm going to have to use it for trade, then I'm absolutely going to have a reserve of those dollars so that when I go pay, I have that money to pay it in. If we lost that reserve currency status, what happens is people will hold fewer of those dollars, and so they will dump them on the system, making our debt worth less, even though our debt dollar amount has gone up, which means the dollar will be worth less. The impact on individuals will be much higher inflation than we experienced. I mean, we experienced very high inflation just a couple of years ago. It was running 9%. 9% is nothing. Last time the dollar was threatened in its reserve currency status was in the late 1970s, when Jimmy Carter, as president, found that he was not able to loan money or borrow money in dollar terms. He borrowed in Swiss francs and German marks. And he went out and signed agreements to where I borrow money, but I will pay you back in francs or marks. That's when we were on the verge of losing that. And if we'd not had the Reagan Revolution and the return to growth in America, we would have suffered continuing large inflation. but our debt then wasn't that great. Our debt now as a percentage of GDP is more than doubled. Bottom line is now it's going to be a lot harder to get off of this debt. We're like strung out as heroin addicts and the heroin gets cut off. That's the kind of idea of how painful it will be for Americans when they realize they can't buy cheap Chinese goods anymore. They go to Walmart and everything's 50 or 100% more expensive. That's the kind of social panic that we'll have.
So you've been stringing throughout some of these answers this central bank digital currency. So a few years ago, President Biden signed an executive order, number 14067. It gave the Fed huge powers to create and test a central bank digital currency. Really, how realistic is it that a CBDC will be implemented, and under what scenario do you see it happening? And as a follow-up, does the Constitution or previous Supreme Court decisions call for some kind of clear alternative?
Okay, so first off is CBDC is inevitable, whether it's Biden bucks or it's the digital yuan. Every major nation of the world is developing central bank digital currencies. We have a whistleblower who was close to the BIS that was in there and heard them, and they're inevitably, it is going to happen. They're very close. The technology exists. They're almost ready to release. And yes, our whistleblowers told us that it is about control of people, that is one of the primary benefits of CBDC. In America, they're very close to doing it. But keep in mind, here's a little bit of glimmer of hope, is it's the government doing it, and the government is not very effective or efficient. And so there's quite possibly it's going to fail initially. Obamacare failed initially. The whole website was a complete mess. Of course, we live under it now. It exists. It's a real thing, and we have to deal. And it's caused, it was designed to reduce healthcare prices, and yet healthcare has skyrocketed since we had it. Health insurance costs have skyrocketed since we implemented it. But they did make it happen. So it is going to happen. The Constitution gives, unfortunately, the Congress the power to coin money. And unless the Congress stops it, the Federal Reserve has been given subordinated power to coin money, and they've been directed by the executive branch to go ahead and test and implement this. So the Treasury is going about it. It's going to happen unless the Congress stops it. The good news is the Congress can stop it. Number one, states can't. I mean, in Florida, God bless Ron DeSantis and his willingness to stand up against it and his willingness to try. But there was something called the Defense of Marriage Act. It doesn't matter which side you land on that. The Defense of Marriage Act was marriages between one man and one woman, and every state, including California, had some version of it. California passed it, and it didn't matter. It was stripped away, put at the federal level, and that will happen on central bank digital currencies unless the Congress stops it. However, having said that, the Constitution leaves a secret little provision, 17 words, that said a state can make nothing other than gold and silver coin tender. That was a provision the founders put in there in case the federal government goes off the rails like they did with the Continental Note. The states can use real money if they want to, and that's been backed up. I've got Briscoe versus Bank of Kentucky. I've got a Bank of Kentucky note where Kentucky was taking money on deposit, and they were in the form of gold and silver, and they were issuing out warehouse receipts that were trading as currency. Supreme Court 6-1 backed them in that. Every court decision has backed what we're suggesting, and that is a state should create a depository of some kind. It can be private. It can be a public, like Texas has the Texas Bullion Depository. They should allow people to put gold and silver bullion or coins to be held there, and they should allow those residents to take a debit card like this one and spend it in their state, as where if I go to the supermarket, I go to Kroger and I buy a bag of oranges, which I've done recently, and I pay for it, it can come out of my gold account and either go to them in the form of US dollars, or it can go to them in the form of gold or silver. That's what I wrote the book Pirate Money about. It explains it. We're talking to 25 states legislators. We're talking to state treasurers. We're talking to governors and gubernatorial candidates. And they're saying, oh, wait, the Constitution has given us a way out, a way of escape from this monetary hell into which we seem to be headed. And we can make gold and silver money again. And it's perfect for average people, because you buy a gold bar at Costco, you can't go back to Costco and spend it. But if you had gold put on deposit in a depository and you got a debit card, you could go into Costco and you could spend it and you could buy the food that you need for your family, which makes gold and silver accessible for the average person. If I have an extra $1,000 and I'm poor, I'm not going to put all of it in gold and silver because it's going to take me a little bit of time to get it out. And I don't want to pawn it and get jobbed, pawning it. But if I have the ability to spend it as money, I can afford to do that and protect myself. I had a lady who was a client of mine. She had 3 rolls of gold coins in her safe. When she died, I had to get them out of her safe and had to get them exchanged. It was a process. It took weeks. I did get it, and I was able to divide that among the heirs of her estate. The problem being, though, if she'd needed the money immediately, it would have been pretty difficult, and I probably would have taken a pretty serious haircut trying to dump those at the local pawn shop. Bottom line is, what we're proposing is making gold and silver money again that can be used at the state level. The state can protect it from confiscation, from taxation, from a whole lot of ills that come. The government that tries to interfere with using gold and silver as money, we can have a state stand up and say, no, the Constitution allows it, and we'll protect our citizens who do it.
So, well, that's amazing that you're spearheading that. So, with regards to the CBDC, do you have an anticipated timing, number one? Number two, do you expect citizenry pushback? Do you expect riots? Do you expect them to say, no, we're not doing this? And third, with the states that you've spoken with and are trying to educate, do you expect the states to actually stand up and put forth this type of response as you've just outlined? I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, the economy, markets, artificial intelligence, individual metals and miners, and all of the expert interviews that we conduct just like this one. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." It's a free gift. It's a must read for everyone on why we all need to own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe and receive that free gift on us.